Meanwhile, Safaricom's Ethiopian subsidiary is still loss-making, but management expects the unit to break even in the 26-27 fiscal year. Ethiopia floated its currency, the birr, at the end of July, lowering its value against the US dollar by over 100%. Now, with that currency adjustment taken into account, revenues rose 7% in the year to March. That is compared to the same period a year earlier. 1 month active clients, data and MPESA clients more than doubled, even as average revenue per user and mobile money transaction volumes fell by around 15%. So what explains the optimism from Safaricom's management? Well, this was part of the conversation between CGTN's Ramanyang and Safaricom's Chief Finance Officer Dilip Pal on the firm's performance in Kenya and Ethiopia.
We are the only segment, industry probably, where you have probably seen only decline in prices. That doesn't happen in other segments. Despite all of this inflationary pressure and all of these things, we have not increased our prices. On the contrary,
so in real terms,
actually price is going down. If you look at real, in last 4 years, I think our voice and data price is down by almost 50%.
Let's talk about Ethiopia. When we last spoke, you had around 4.44 million clients in the country. You've effectively doubled that now. You're knocking on 9 million clients. The firm is still maintaining that target for break-even by 2027. Why is that?
It's a startup business. And telecom startup is a lot of investment. So when you invest, initial years you will have losses. And Ethiopia is no different. What was different and what was actually was a bit disappointing for us is the price levels. Price levels are very low in Ethiopia. For us to be, a scalable business that we call that scale in terms of infrastructure, which is sites that we build, that we said, if we reach around 4,000 base stations, we call that as a scale. After that, you incrementally, you cover some more population. And then we call another one, we call that as commercial scale, which is the number of customers, which you said, if you reach between 15 to 20 million customers, that's when the scale comes in. And if you now look at the guidance for FY26, we said we still committed to do the break-even. And if you see the numbers on Ethiopia's guidance, the assumptions behind those numbers, even for FY26, the customer number is 15 to 17 million.
How much pricing room, though, do you really have in the Ethiopian market, given everything that we've discussed, right? The devaluation problems, there was a 50% devaluation in the Ethiopian birr. Inflation has been a long-running issue in that country. The National Bank of Ethiopia, the target is to essentially drop inflation down to around 10%, if not this year, in 2026, and they're pretty much on course to pull that off. But given that sort of macroeconomic environment, right, when the value of the currency has fallen significantly, inflation is still a problem, and on top of that, there might be a challenge around interconnection rates between Ethiopia Telecom and Safaricom. How much room really do you have to vary prices?
What happens naturally in a market environment where your cost of delivering a service becomes higher because the currency is depreciated, right? I'm also, sometimes I'm also quite surprised in a way this becomes such a big conversation around, when cost goes up, the prices also goes up. It's not that you can't, you will not be able to absorb, because otherwise the business is not sustainable for any type of business, right? And I don't know any specific segment, but we are aware that prices in general has gone up in Ethiopia for many other sectors, for other industries.
Is it potentially too early, at least in the case of Ethiopia, to start talking about layering, value-added services on top of just vanilla mobile money services, right? Peer-to-peer transfers, paying for utilities, and so on and so forth. Because comparing that to Kenya operations, where individuals can go on their phone and have access to savings products, overdrafts, access to mutual investment funds, there's still a lot of upside, I think, for the Ethiopian business. But is it still a bit too early to start talking about that layering process in Ethiopia, or is this an opportunity for the company to just go full throttle and introduce those services now?
So one of the things that we have been debating internally and also in the board is the need for mobile money in Ethiopia is very strong because it's still a cash economy. So mobile money is nothing but you are replacing the cash with your digital wallet, right? That's the digitization part of your physical cash. That is very compelling. That still remains. The question is how and what are those digital wallet are going to be used for, right? So when we went to the market, we said that, okay, let's not boil the ocean. We know some of the things that worked in other markets. Let's just go ahead and launch those. And then we started repurposing, going back to the drawing board again to be able to see, okay, what do you have to do differently